Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Tesla has changed the car industry. EVs are the future. What we don't know, though, is which EV companies is going to be the winners going forward. I'm Jason Hall. This is The Smattering. I got Tyler Crow here with me, and Tyler had an excellent idea and a great company to back it up. Not sure how to pick the winners in the EV space. Here's a company that can be a big winner no matter what happens next. Tyler, how's it going?
I'm doing pretty good. And this is one of the ones that I actually really enjoy talking about in the automotive industry. Typically, I kind of roll my eyes. You know this about me when it comes to
Yep.
autos, but when we start to get a little tangential is when we can really find some amazing investment opportunities.
Before we go off on that tangent, though, Tyler, I do want to lay the case. I want to lay the groundwork of where we are with the companies in the space right now. Let's start with Tesla, right? This is the first mover. Man, their growth rates over the past 8 to 10 years have been enormous, especially as they've gotten to scale, continuing to sell cars at a really high clip. But it looks like somebody has just slammed the brakes on that number. It looks like we're about to find out inventory is a real issue. And as it reports this next couple of quarters, we're going to find out all those big price cuts they took. How's that affected its margins and its cash flows, right? We're going to learn a lot about that. Then you look at RIVN. This is a company that's much earlier scale, but it looks like they're having the same problem. We're hearing stories that they've got more cars than buyers that are ready to buy them right now. Lucid, which its biggest owner, of course, is the Saudi Arabian, the public investment fund, just did, I think, a $3 billion equity there. They just can't figure out how to scale. They have a real problem actually getting just from the ground up to get to operations. I don't want to spend a lot of time talking about Canoe, but I at least want to mention it. The stock's less than 50 cents a share. We don't know if they're going to be able to even make it as a going concern unless they can find some money from somebody that's not going to wipe out their equity completely.
Not to mention the other startups, as well as the legacy automakers who are
Right.
growing EV production at a pretty fast pace. And that is the critical point here. Everyone's growing production at a fast pace, and that's where we're going here.
No matter who wins, BorgWarner is set to be a big winner.
If people aren't familiar with BorgWarner, this is a company that's been in the background of automotive manufacturing for decades. They used to make a lot of things which were called air management, which was basically turbochargers, superchargers. That was their bread and butter for decades. They were amazing at it. They had huge returns on equity, but obviously that's not the business that they don't want to be in anymore. They have built out a suite of automotive parts specifically for electric vehicles that is going to allow them to sell to all of these various companies. They're what is called an original equipment manufacturer, and being able to sell to a multitude of legacies, startups, or whoever needs these parts and doesn't want to have to develop a brand new inverter. They don't want to have to redesign the coolant systems to keep your DC charging system from overheating when you're plugging in your vehicle. It's the small components that are absolutely necessary for a vehicle to work, but they're not the ones that you think about. We think about the battery and we think about the electric motor, but there's a bunch of other parts too that are just as important, just as critical, and just as profitable for a company like BorgWarner. Between now and 2030, BorgWarner expects that its e-product suite is going to grow revenue 20% annually. Its signature product are those inverters. It's a huge one, but it's also a whole other suite of products, including charging stations and other things associated with electric vehicles that is going to be a major part. They're going to go from 17% of revenue for e-products in 2023. By 2030, it's going to represent 64% of total revenue for the entire company. So we have a company that is basically going to rise with every single one of these manufacturers, regardless of who wins what market or where. They're probably going to be using BorgWarner parts one way or another. And just to add that little extra icing on the cake, BorgWarner currently trades for 1.4 times book value, and its forward earnings estimates is 8.8 times. That is actually a reasonable price for a company that's expected to grow the way BorgWarner expects.